Good morning, everybody. It is Monday, May 12th, and we're going to start our prep for the equity indices today and gold and oil. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So we're opening on a very large gap up this morning on the ES, and we'll start with our positioning and work our way through. So we got the data on Friday for the COT information, and commercials again are still distributing. They bought in April, and now we are up about 1,000 points from there this morning. So they have 46,000 contracts still that they're long that they can sell. And so this is why we watch the positioning of the commercial side of the market, because in the long run, they will not lose this game. Another big one is Bitcoin. We saw a position get built there over the last coming week or last few weeks. And again, we would look for upside on Bitcoin, and now we are looking to break all-time highs there. We did that on gold already. The big one on the currency side, and again with correlations, would be the dollar. Commercials are long the dollar, and so we're not hedging the currency, and then short the yen. So we will be looking more for downside on the yen, looking for the dollar to strengthen, and then if we look at our correlations, that would signal gold to go down a little bit. The equities, Bitcoin, and treasuries more likely to be up, which means or treasury rates to be stable and higher, and then the treasuries themselves, so the bonds to go uh, down, and that's going to limit rate cut expectations as well as we make this move. So on to high yield. We mentioned this last week. We came where there was getting to be credit risk, and now that's separating. So that has pulled away any recessionary signals. Bond market volatility has come down. We are looking for that to begin to return. We could make a move still lower down to 90 or the upper 80s on the move index, but we are still holding that uh, 90 area for now, and that's typically where we've seen that volatility come back in. On multi-asset volatility, the big sign here is the VIX. So it's right behind the gold volatility here. Both are around 21 to 22 as of Friday. If we get below 20, and then we start to get more uh, condensed ranges. We start to get more of an upside continual push in the market, and we will change our states in the market as well. And this will become much more supportive. So as we were looking at a bear market, this 20 area, it's not highlighted here, but you can see that gray line. Getting underneath there, we will look for more favorable conditions to begin. Otherwise, we still want to be on guard as the Vanna and Charm flows have come out of the market into this move. And on positioning for tomorrow's catalyst, tomorrow is CPI, don't forget, and then Friday is OPEX. So we end a business cycle on Friday, and we have the big data everybody wants to see tomorrow, which should be the last downtick in inflation before we start seeing it rise back up in June. Um, we look for if you go back to last week's videos or the week prior, we look for this to get into the red zone. That tells us that everybody's bought the insurance ahead of the big storm that could be coming, and that puts a floor in the market. We saw that play out many times last week. If we go into this without that protection, then that opens up the door for a big downside surprise, as nobody has insurance. So storm hits, wipes you out, and now you have to pay everything out of your pocket to rebuild as opposed to the insurance company. And remember, the insurance company in this case is going to be the commercial side of the market. So they know everybody's positioning and they would hold the market accordingly. And this is one of the tools that we see. And we watch this today. We watch it minute by minute or at any interval that you have your charts, and we look for that to begin to start ticking up. Now, that's likely not going to happen until the second half of the day because nobody wants to buy insurance too early. Nobody wants to buy if they're just going to be sitting. They'll wait until 2 o'clock, 3 o'clock, because the data comes out at 8:30 tomorrow morning. So we'll be looking for that downward pressure to come in to the market, and if we don't get that, then that'll change what we look for tomorrow. And then we mentioned this as well last week, systematics And algorithmic based strategies are back on the sidelines. They had their big buy day on Friday, where they bought about 10% of their portfolio, but they're still only around 21% invested overall. And we'll see small flows of around 300 million to 600 million per day for the next month or so, but that won't even be 3% until 3% of their total portfolio until we hit July, when in about 6 to 7 weeks, when we start to see the flows from this group begin to pick back up. So we are beginning to run out of some cash on the from the sidelines here. This group won't be buying, and we saw investment managers performance chasing from 35% invested back in early April to 81% now. So they bought 20% last week, and they are looking to continue that performance chasing this week. And again, we look for these signals when we get the outsized moves. When we start to get closer to that 100, we can go through. This happened in February. It happened right before FOMC in December. It happened in July of last year. When we see this group running out of money, this is the biggest group because you're talking trillions in assets under management that can push the market. And so when that money starts to run up, that's when we look for a top. When it starts to get too weighted, the boat starts to get too shifted to one side where there's too much money on the sidelines, then we are likely at a bottom. And so that's what we saw at the beginning of April. And now we're just making that big bounce for the performance chasing. So now with the structure out of the way, we will take a look at our levels for you for the day. So on the ES, we are looking for rotational price action from 5808.25 to 5687. Our pivot is going to be at 5847 half. And then if we get over our rotational high, we'll look for 5860, 5869, sorry, and 5905. So those would be the upper targets there. And our line in the sand is far below us at 5,700. So that's going to tell us that we can look for a change in the way market makers behave today. Some other key levels for you today are going to be 58.96 3/4, 58.41 quarter, 58.18 half, and 57.86 quarter. And then on to the NASDAQ here. So we are at our upper edge, upper targets. Now the NASDAQ does sometimes exceed these a little bit, as you see back here in early April. So we could see a little push up. And so we're looking for rotational price action from 20,715 to 20,173, which we're over that right now. Our upper targets become 20,986.25 and 21,149. And we are well over our line in the sand. You can see it's at the lower end of our range today. And our other key levels to pay attention to are 20,968, 20,547 quarter, and 20,772. And then on to crude. So crude has been this buy signal down at 55 for a while, and then we looked for rotational price action. On Friday, we broke out of that rotational price action, started making our push up. Then we zoom out, and we're still in the same area. So we're going to look around that 64, 63.80 to 64 as the upper end of this balancing zone. And our rotational zone today is 62.58 to 60.32. So again, over 62.58, we look more trend, which we've gotten in the overnight. So our targets on the upper end are 63.71, which will be right around the tops here that we had in April, and over that 64.39. And other key levels, if we do make a push above that, and our ranges do expand for you during the day, 64.73 is the key level above us. 63.93 is another key level, and then 62.70. And then on to gold. We are rotational between 33.35 quarter and 32.48 quarter. Now remember, with the dollar breaking out, we are looking at gold to break down in the immediate term. So if we stay under our rotational low, our lower targets are 31.78 half and 32.04 3/4. And just inside of our rotational zone at 32.48, we have a key level at 32.54 half. So if we get over that, then we can really start looking for a bit more rotational price action. But this is the key level inside of the rotational zone. Other key levels today, 3210.6 and 3189.3 on the downside. So again, guys, we talk about this every time, but make sure you control your risk. If you start off with making sure you know how much your max loss is, then the wins can take care of themselves. But we need to focus on controlling our risk first and foremost. So be sure to do that today and tomorrow ahead of CPI, and have a great day out there.